your first business, but you have no idea how you should structure it. Should you be a sole trader? Should you have a limited company? What should you actually do? Lots of these videos on here don't seem to come to any conclusions on the action you need to take. So what I'm going to do is I'm going to go through the costs of both, the advantages and the disadvantages, and then I'm also going to give a recommendation depending on which industry you're in for which one might be best suited to you when you're first getting started. So first up, we're going to look at, I'd say, the most popular option, which is the limited company. We all seem to want to set up a limited company, but is it actually a good idea? The best thing about having a limited company is you have limited liability. So that means if someone sues you because of the work you've done, then they can't take your personal assets. They can only take your company assets if they are successful. So you're not going to lose your house because someone sues you. They're suing your company, they're not suing you personally. It also looks more professional when we have a limited company. It's nice to tell our friends. It makes our business look a bit bigger. So that can be very attractive. Tax planning, you have much more tax planning opportunity within a limited company. But of course, this is a new business. So new businesses in their first year usually don't make a lot of money. Well, depending on the industry, but most of the time we've got to invest a load of money to start with into our new startup, and it means that it's not usually that profit making immediately. So yes, we have a lot of tax planning opportunities within a limited company in the future. Is that going to be amazing when you're first starting? Potentially not. But again, let's think about our industry. Do we have a lot of startup costs? If you don't have a lot of startup costs and your fees are quite high, then maybe you would have immediate tax planning opportunities. You want to sell your business in future. So maybe you're starting this business with the hopes of just selling it on within a couple of years, building it up and selling it on. You can simply sell the business as a whole onto somebody else, pretty clean, pretty easy. Let's have a think about the tax issues. So, well, they're not really issues, they're just things we need to be aware of. So a limited company files a corporation tax return every year. Tax rate is between 19 and 25%. I've got loads more on this type of thing if you want to check it out, but I'm just doing a brief overview today. So we've got our corporation tax return, we're going to file it every year. We've also got to file accounts with Companies House every year as well. So we are going to need to get an accountant if we have a limited company. Do we need an accountant straight away? Absolutely not, but it is something you're going to need in the future, and it is something to be aware of, and that of course is another cost. And finally, we're going to need to do a self-assessment tax return, because the way we extract funds out of our company is mostly via dividend. I've got a lot more videos on that if you want, but let's focus on kind of the key issues here. So mostly via dividend. Now, dividends are not taxed before they reach your bank account. So for example, if I was employed, my employment income will be taxed via pay as you earn before it hits me. So I might not be already doing a tax return, whereas the dividends, they are coming out and they haven't been taxed on you personally. They will have been taxed in the company. The dividends are essentially taxed twice. Once on the corporation tax return, they are not deductible for corporation tax purposes, and then they'll be taxed again on you personally. Other costs you're going to have when you set up your limited company are going to be things like incorporation fee, which really isn't very much. Then you'll have all your normal costs that you'd have if you're a sole trader, your insurances, any items that you need in order to run your business. Who would a limited company suit? I think this would suit somebody who is confident they're going to make a really good profit straight away. Someone who's maybe in professional services. I'm a tax advisor. I would not be trading as a sole trader. There's too much risk if something goes wrong and someone sues me. So I would never do that. So maybe if you're like a lawyer, doctor, that sort of thing, professional services, then you want to have a limited company immediately, regardless of if you have any income or not. Maybe if you're in an industry where it's likely you're going to make a lot of profits straight off the bat, then you might just want to start with your limited company. There's more tax planning opportunities, and some businesses don't like working with sole traders. They just prefer to work with a limited company. It looks more professional. So if your customer base is going to want to work with a limited company, then this is the option for you. Sole trader. So this is actually my favorite option for most startup businesses, and I'll tell you why. I am going to start with a disadvantage though to keep it balanced. We have no limited liability, meaning that if someone sues us, they can come for our personal assets, which is a massive disadvantage. But If you are not making that much money, maybe you have started like a cake making business or you're selling on eBay, you're not making that much money. What is the risk? And that's what you've got to think to yourself. What is the risk here? Have I got that much risk, or is it simply non-existent? If you have a small amount of sales, it's not a high risk industry, then having a limited company is just a big hassle straight off the bat because it's expensive. It's a hassle when you want to get rid of it if you decide that you no longer want to pursue whatever it is that you're pursuing. Whereas as a sole trader, it's super easy just to stop trading. You can stop trading and there's basically either none or minimal paperwork, which is fantastic. The minimal startup costs, I think, are a massive thing you need to be considering. We actually don't even have to file a self-assessment tax return or any tax information with HMRC until we have over £1,000 of turnover. Turnover is money that we receive for our items. So say, for example, I was selling cakes and they were £100 each. I would need to sell 10 cakes before I even have to register with HMRC as a self-employed person who needs to file a self-assessment tax return. This in the future is going up, this £1,000. It's meant to be going up to, I believe, £3,000 by 2029. So depending on when you're watching this, just keep an eye on that. There's no publicly available information when you are a sole trader. Whereas when you have a limited company, that company's information is on Companies House. Now this is another cost of having a limited company. So for example, if you look my business up on Companies House, you don't get my home address, you get my office address, which means you are then going to have to get a registered office, rent an office space so that you can have everything public at that office. You don't want people knowing where you live, it's not safe. And one more disadvantage to being a sole trader is that we have Making Tax Digital coming in. Making Tax Digital is going to increase our compliance requirements with HMRC. Instead of the one self-assessment tax return you have to currently do, you'll be doing 4 reporting returns and 1 self-assessment tax return. Now, that is only when you have income of over a certain level. So, for example, the first year it's £50,000, then it's £30,000, then it's £20,000. Again, depending on when you're watching this, will depend what the income threshold is actually at. Sole trader might be a great way to get yourself started. See if it's a business that you're wanting to continue, or if it's maybe just one of the things you try out and then you think, actually, it's not for me. If it starts becoming quite successful and you're making lots of money, then I would say go and swap over to having a limited company. Get in touch with an accountant and they will swap you over.